Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Tuesday, August 24th, 2010. Well, folks, the markets are being hounded to the downside. We are seeing losses pretty steep on Wall Street, although it is off the lows significantly. Now, I'm going to go over the keys on this day, what caused the drop, what the technicals are telling us, because there are some major technical signals right now pointing to a major support level that we are hovering around currently. And again, all this information was given out prior to it happening today, dictating tick for tick what the markets could be doing, where the levels will be to look for a bounce. And again, we continue to nail it in the research center at inthemoneystocks.com and in the intraday stock chat. Now, the Dow is down 109 points today, or 1%. NASDAQ is down 30 points, or 1.4%. S&P 500 is down 13 points, or 1.2%. The key today has to be looked at as the key 105.80 level on the SPY. Now remember, right now you are looking at the SPY, which mirrors the S&P 500. We're looking at the 10-minute time frame, so each candle is 10 minutes long, and you can see heavy volume today, 178 million traded already. Very, very nice. As I zoom in a little bit, what I want to draw your attention to is this orange line right here. Now, this orange line is extremely significant. I gave this to my members in the Research Center nightly video, which again is included in everything else in the Research Center for $49.99 a month. But the bottom line is this. This level is everything in this market. I'm telling you right now that if you close above this level, you will probably see a float higher or neutral bias to slight upside bias for the coming days. And if you close below, you should go retest this 105 level and possibly even trade down to 102 to 101 on the daily chart. Now, where do we get this level from? Why is this so significant? To show you why this level is so significant, what I'm going to do is flip to the 60-minute chart. If we go to the 60-minute chart and zoom out, you can clearly see that there's a pivot point low on a gap down right here going back to the 20th of July. So July 20th, there was a gap down at the start of the day that rallied, massive rally, as you can see all the way up here on the chart. That pivot low is exactly at 105.80. So 105.80 is that level to watch, folks. And again, I can't stress that enough how key that point is. You can see the markets miraculously were on that level. And I'm going to flip back to the intraday now. So we opened right on that level, and then we got some very, very ugly economic news. Now, let's go back a second. What's the cause? What's the result? I mean, what is causing this market to sell off today? I mean, really, basically what's going on, folks, you have major concerns globally in Europe, in Asia, and even here in the United States that the United States recovery is way off track. Bottom line is, I could have told you that months ago. In fact, I told our members that months and months ago. Going back 6 months, a year, whatever it was, the reason why we had a move out of a recession was because of government stimulus, massive pumping of money into the system. That has now stopped, and just like we moved out of it with massive government stimulus, when that dries up, the market moves and the economy moves right back into the recession. And again, it's not a good recession. It's a very deep recession. We're going to go back down, and that's the case. Now, politically, stimulus is not the best thing anymore. Why? Well, you're not going to get elected by running up our national debt any more than it already is. We already know that. So right now, the government's really anti-spending trillions and trillions more dollars, although they're going to try to do stuff. Don't worry about that. The Federal Reserve will try to do it as well. There's a lot of crazy stuff going on out there. But bottom line is, you see us back in that. The world knows it. The U.S. knows it. The market is panicking off of it. That's what created the gap down today. Now, going into the 10 o'clock time frame, at 10 a.m. Eastern time today, you got existing home sales. Existing home sales, get this, folks, dropped 27%. To the lowest in 15 years. So again, this is just showing you what we already knew. They tried all these mortgage loan programs. The government kind of stepped in on the housing side. All those programs are failing. The housing market is getting ready for its second move down. Remember how a chart works, folks. No chart ever starts at the highs and just falls directly to the lows and then stops. Charts go in cycles. There's always a cycle to it. Just like this. All right, take a look. Let's pretend this is the housing market. Here's your top. It fell down and got a little bounce. Now it fell down again, got a little bounce. Now it collapsed again. That's how charts work. That's how the housing market's going to be. So you had a little bounce over the last 3 to 6 months in the housing market. Market prices stabilized. They maybe inched up a little bit in certain areas. Now you're starting the next leg down. Next leg down, ultimately 20 to 25% drop before this is all said and done from current levels, folks. From current levels, maybe even more. We're still above the long-term trend line of prices for housing. If you go back to the 50s, 60s, 70s, 80s and draw a trend line between the average prices, you're still above that line. No line ever comes down. You never just come down to the trend line. It's like this right here. You don't just come down to the trend line and stop right there. If this is the long-term growth, you go below it, and then eventually you rally back up. And we're still above it, so we still have to go all the way below it. Very, very poor outlook on housing, obviously, folks. Again, not a lot of you that are housing owners may not want to hear that, but listen, it's all cycles. That's just the way things go. You got to be smart, stay within the money stocks, or join in the money stocks to get the outlooks on all this. We'll tell you when housing prices are going to bottom. We're going to tell you when the market's going to turn around, just like we called the exact top on this market just a few weeks ago. We'll tell you exactly when the bottom's in, when to start to look for a move up. That's why we're here, folks. We guide, we do analysis, we give swing trades, and we give education. We teach you how to do this for yourself, and that's the beauty of what we do. And I love that, folks. That's my favorite part, educating. I want to teach you how to fish, make your eyes open wide with the spectacular things that I can show you so that you can do it on your own. You can apply it to currencies. You can apply it to commodities. It doesn't really matter. You can apply it to anything out there. All right, so in any case, as the market got that existing home sales data, it dumped out huge, went right down here to the next level, which was at 105, pierced the 105 level. Now, I was waiting to buy this. I knew it was going to be a bottom. I gave it to the chat room as a bottom today. I said even before it happened, I said, if we flush, look for a 105 pierce. I had my order at 104.95. It went to 104.97. Didn't fill me. So I'll gladly admit that, folks. I didn't get filled on this. I had an order out. I just was 2 cents below where it went to, and then the bounce came in, and what a bounce it was. People in my chat room did get filled. It was a good job for them. I'm very proud of them. They've made strides in becoming master traders of making millions and millions of dollars and thousands, depending on how big of a trader, how they are, and how newbie they are. In the chat room, by the way, all levels. Newbies all the way to pros making tons of money. And again, that's all it's all about, guys. I just want consistency and profit making. 8 to 9 winners out of every 10. That's the goal here at In the Money Stocks. No one can be perfect. We're not perfect. I'll say that gladly. Anyone who tells you they're perfect, that's a lie. So again, it's all about understanding that. We try to keep it as high as possible. 8 to 9 winners out of every 10. 80 to 90%. We'll do it and do it again. All right, now in any case, the market bounces back. You come up to the 20 moving average. And then notice how the market just all of a sudden is just hovering right around 105.80, 85 level. The master level, well, again, there it is just holding steady. In fact, as I speak right now, we are printing 105.80. And this is a master level. Literally the 105.80 to 85 level, folks, I gave out weeks ago as a master level. And again, you can see it very clearly. I showed it to you on the chart on the 60-minute. Again, I'll show it to you one more time here. Take a look at that from that pivot low. You just got to know these levels. Know these levels, know what the master levels are, understand what it means, whether it breaks below or breaks above. On a daily chart where it closes is going to be important. All this stuff is so important. Can't stress it enough. All right. Now, what's getting hit today? Oil is down today, down pretty sharply. We can see the USO is down near the lows of the day, trading down 56 cents. There's something key on this chart, but I'm not going to reveal it right now in the intraday video. You've got to join, but again, it involves a possible trade, and most likely a trade by the end of the day here for a swing trade purposes, and you can join the research center to get that trade. And then gold today, gold is trading up. Not surprising, with fear in the market, chances are gold is going higher. And then obviously, if we go to the dollar, what's the dollar doing? Dollar initially was up today, but as soon as that economic news came out, it dropped sharply. You're actually making an in spirit of bear flag. You can see a clear bear flag here, hovering, sideways move, down sharply, and then sideways move. That's actually an in spirit of move. All right, folks, enough for today. Join the research center. You got to get involved here. This is where the money's made, where you're going to pound your retirement savings in, make it bigger, and where you're going to make money to spend some money and enjoy life. Take care. Join in the moneystocks.com's research center and intraday stock chat.